What's going on in the Denver metro real estate market? Hey, it's Sean Reddy, Keller Williams Reddy Group. Each and every month, we bring you the Denver metro market in a minute. And it being January, the calendar rolling over, we're looking at this from a year over year standpoint this time. So we're going to compare all of 2024 to all of 2025, give you the perspective from a longer term as well towards the end of this video, and tell you how to use this data if you plan on entering the market either as a buyer or a seller, or you're doing both to transition houses. You'll leave here knowing what to do and how to leverage this data to your advantage. So let's jump in. The color coding here, if the metric is in green, that means it moved in favor of sellers. If it's in red, it moved in favor of buyers. Obviously a lot more red than green, so we'll start with the green. And it's just price, average and median price incrementally barely increased year over year. Now, from a historical average, we typically see average home values increasing about 4% year over year. Last year did about a tenth of that in the Denver metro, 0.5% increase from 717 to 720 on the average price, and a 0.5% increase from 594 to 596 on the median price. So obviously increases are good, but still, we'll just call it flat and not hedged against inflation. We'll put it that way. Now on the red side, if you're buying a home independent of selling one, these are all great metrics for you to leverage in your home search and in your home negotiations. Starting with market times, the average and median market time both up pretty significantly year over year. Average time up 23%, median time up 33%. The gross numbers, going from 24 to 32, that's just 8 days, but it is a 33% increase, 32.5. New listings up 6.1%. There were 3,500 more homes that hit the market last year in 2025. It's weird to call it 25 last year, but last year compared to the year before. So more choices. New purchase contracts down 1.7%, so less people putting less homes under contract. Closed sales down 0.3%. That gross number is 130-ish. So not a significant change there, but still down nonetheless, meaning if you're a buyer, you had less competition last year. And lastly, the median sold price to list price ratio, that moved by 0.15. Not a huge move there, but down nonetheless. That means buyers struck better deals, or less or more off the final asking price across the board last year than in 2024. So how does this play out over? I got graphs here dating back to August of 2022 when the market started changing due to interest rates going up. So we'll see how this kind of rolls out over that 3.5 year cycle. Starting with average and median days on market, average in the blue, median in the red. And you can see the seasonality ebbs and flows remain unchanged, although the swings might be a little more. But as of December, we're starting to see some short-term highs here. So we'll watch how this plays out and see if it continues to go up, or like it typically does this time of year, just does a reverse course and start going back down. Stay tuned. We'll get back to you on that in February. This one, let's start with available homes in the red, new listings in the blue, new purchase contracts in the yellow. And available homes has been by far the biggest story over the last couple of years, as inventory has ballooned compared to previous years. In fact, topping out at over 15,000 at what point? At May-June timeframe this year. And then, as it typically does, towards the end of the year, starts falling, and this time fell off a cliff, going from 11,000 homes available at the start of December to just 8,000 homes available at the start of January. And it's not because they're being gobbled up. A lot of them are just pulling off the market. New listings took a pretty significant and repeatable dip at the end of the year, but as did new purchase contracts, falling pretty significantly. So basically all three of these more subdued in the winter months, particularly December, than the rest of the year. So we can expect to start seeing all three climb up again. But the point to this graph is the bigger the gap between the red and the yellow lines, if you're a seller, the slower it's going to feel, especially if you're not priced competitively. But as that gap starts to narrow, buyers have less options out there. So you start looking a little bit better in the marketplace, provided that, again, you are priced according to the market, according to the homes that you're competing with. Closed sales. Not much of a story here. You always see that January dip down to the lows of the year. I suspect we'll see the same thing when the data comes out after the end of January. But there was a slight increase in closed sales in December, and that's not abnormal. Average and median price. Average in the blue, median in the red. Both fell month over month, but remain in range with where they have been. Again, price is going up 0.5% year over year. That does take the entire year into account, not just December's average price. But definitely something to watch to see if this trend continues on and we see these prices continue to fall. And then finally, median sold price to list price ratio, generally again falling into that 98 to 100 range, with some peaks and valleys here and there. Not much to talk about there until we see that median cross north of 100. Then we know it's becoming competitive in favor of sellers again. So there you have it. Broad 7-county view of the year over year and then kind of longer term perspective of the Denver metro market. Now, if you want something that's a little bit more drilled down to your town or your neighborhood or even your street, let us know, because we can plug and play those numbers and talk shop with you offline. If that's something that would benefit you in your real estate goals, just make sure to drop a comment. Happy to reach out with that data to you. As far as putting this to work for you, if you are in the market now or you plan on entering the market anytime in 2026, either as a buyer or a seller, or you're doing both, make sure that you are aligned with professionals who know and understand this data and know how it can benefit you in your real estate goals. If you don't have that person, we want to be those people for you. Drop a comment. Happy to be a resource for you. Thanks so much for watching. Again, Sean Reddy, Keller Williams Reddy Group, and we'll see you next month. Happy New Year.